Welcome to your weekly market update. Some exciting news in mortgage rates and some recent developments that could be getting the housing market back on track. And remember, if you're out looking for a home, you don't want that to happen because you don't want all these other buyers entering the buyer pool and driving up the price of housing. Now, if you've been following these updates, you'll know I've been saying 5 by 2025, 5 by the summer of 2025. And this recent development might make that a lot quicker than even I was expecting. And that is a shrug off of the strong jobs report that we had on Friday. And I'm going to show you why the bond market shrugged off this positive report. It was higher than analysts had been expecting, which almost always means higher mortgage rates. But the opposite happened. You can see that we actually got a little bit better on that day and we're relatively flat. And that's an amazing development. But the jobs report and inflation are the two things that drive mortgage rates, right? If one of them is really good, like a good jobs report, that typically means that interest rates go up. But that did not happen on Friday. And let me show you why. If you've been watching these updates, you'll know I've been screaming from the rooftops that the Bureau of Labor and Statistics data has been flawed, and their household survey showed it. So while they showed 250,000 jobs created, their household surveys showed 355,000 jobs lost. And if you look at how many they said exit the labor force, and they ask a few questions like, have you had an interview? Have you applied for a job? Have you had any offers? And I believe you have to answer yes to all three of those things to stay in the labor force. If not, they look at you as you've exited the labor force, right? So especially during this time of year, some people just are going to take the last couple of years off if they got laid off or they quit their job or maybe they got fired. They take these few months off, right? So if you add that back in, that would make the unemployment number worse. And that's why the bond market, while the jobs report it was up, actually reacted positively to this information. Because when you look at the actual data and don't take out people exiting the labor force and why some of them would, right? It's reasonable to think that most people are just taking a break and still need a job, right? Not always the case. And obviously, this data can't always be perfect. But if you look at October and you add this number back in, then you're at 4.3% unemployment, which is a huge increase from 4.1 when you're looking all across our country. And then in November, remember they round these up to, right? So 4.2 would have got rounded up to 4.3, and 4.3 is almost a 4.5. Which would be close to a 4-year high, right? Now, remember, we had COVID and that threw things off in 2020 and into 2021. But a 4.35 unemployment rate is a high rate. So the jobs market is not as stable as the Bureau of Labor and Statistics data would like to support. Now, why we want a healthy economy and we need jobs in order to do that, us in the mortgage industry are celebrating because we could get that 5 by 2025 sooner than the summer that I've been predicting. Now, you want to take advantage now why rates are higher because you'll get a lower price on the property, all things being equal. So stay diligent on your search. If you have any numbers that we need to run for you, we're happy to do that. Marry the home, date the rate, refinance. Remember, we do that for free. And I'm even offering, if you pay points now to have a lower interest rate, I'll carry those points over for you one time guaranteed to a refinance. That way you get three benefits. You get the lower interest rate now, you get the tax write-off, and you will get the lower rate on the refinance. I will do that for you free of any of my charges and will carry those points over. So unbelievable offer. Have a happy holiday season and let us know if we can help you in any way.